Hello everybody, this is Gabriel. You surely heard it. It was in the news that crude oil has tumbled to levels never heard before. So let's have a look here at the charts. So what the press is talking about is the May crude oil futures contract. So we've seen this big slides down. So what is really amazing is that it crossed the zero level, right? So one barrel was worth kind of $40, which means that if you want to buy 1 barrel of crude oil, well, you are receiving $40. So how can something like this happen? Well, this happens if there are no buyers, right? So there's no bid. So those that are selling, if they don't find a balanced price that where the buyers and the sellers meet, well, that's what you get, right? You can't get negative prices here. But this is obviously a very special situation. Well, this is the May futures contract. First of all, the May contract is not very liquid. We're going to have a look at that later. Secondly, this contract is ending actually today. Today is the last trading day. So there was some squeezing here. Somebody is belly up, right? So it might be a hedge fund, it might be a big bank, it might be derivatives, it might be an ETF. So somebody has big problems here. Let's have a look here at let's have a look at the comparison. So this is the May futures contract ending trading today. And this is the June futures contract. So yesterday, this big downfall happened on the 20th. So on the 20th, we didn't see this, right? We saw the liquid one, the June one. We saw a drop, but we didn't see this overextension. Now, the June contract, which is the most active month now, well, we saw this drop actually this morning at 6 a.m. Eastern time. We saw this drop to the $12 level. So is this a big surprise? Well, actually it is not. Here you see the other time frame. So we talked about that extensively, right, on the blog. So this was an S1 gecko pattern. And we talked about, well, why does that make sense at all? Because we're trading here against the daily and even the monthly resistance, right? So this pattern just formed here, like just above this this important resistance line. And the idea was, well, if once this starts to run, power comes out of the pattern, like this starts, if this starts to run and triggers the first stop run, well, then we might get a big move and this transforms into a swing trade. And we've seen it, right? So we've seen the monthly chart breaking lower. Is this a big surprise? Is this a big surprise? No. Just go back to the other one. Well, it's not a big surprise, right? We've seen this consolidation. I've talked about it like many times during the last months and even quarters and even years. I've talked about it that after this long consolidation that was on for a couple of years, 3.5 years actually. Well, this is the trend following consolidation. We're coming from 220 during the great just before the great financial crisis 2008, and we've seen this consolidation. After this consolidation, we just saw a trend continuation, and we see the same thing here happening now. Like we've got the consolidation. The longer the consolidation is on, the bigger the move is, and we're expecting a measured move, right? So this is a measured move. And this happened today. It went down to the $10 level. Well, this is what was in the cards. We had a super low risk idea here with the potential of breaking this long-term resistance, and this is what happened. And this is how a stop run move looks like, right? So whenever there's whenever there are problems in the financial markets, well, there are always great opportunities too. So here once more the trade we discussed. It was really a nice S1 pattern here with a potential break of the daily, and and that's actually what materialized really nicely. So being a trend trader, you should not get stuck in a situation like this. So many people got hurt here, and some people are belly up, right? So this is the May crude oil futures contract, and as you see here, well, that's the zero line, and we just see this drop towards the 40 level. So there's a big squeeze, and a lot of people are getting hurt here. Well, a lot of people are profiting, but a few big guys are really hurt here. Let's have a look now here at the crude oil futures contract, because actually today is the last trading day, right? as you know, you get all the information on the contracts on the CME website. So here we are with the crude oil future, and we can see it further down here. So these are the individual contracts that are running. That's the May contract we talked about here with a negative price. And these are the other contracts. So although there are contracts on every month, well, the most active contracts are actually June, August, October, like every 2 months. And the May was not a liquid contract, right? It was March, and then June. So May has the last trading day today, actually. So let's have a look now here at the contract specifications. Here, contract specifications. It's deliverable, so it's physically, right? Termination of trading is 3 business days prior to the 25th calendar day. Of the month that it actually expires. So that's today, the last trading day, right? So and this is where the squeeze comes from. There was no buyer of that contract, and so the price heads to fall, right, to levels below zero. You should really use the information I provide. So this is the trading universe, like the spreadsheet with all the details. Let's have a look here at crude oil. Crude oil, we can see here how it's the settlement is physically delivered. And these are the expirations and the active months. So it's February, it's April, and it's June. So it's not May, right? So May, first of all, you should never have traded May. And secondly, well, you should already be on the active months, which is April. So you can never get squeezed, right, in such a situation. And it even tells you the rolling date. So I'm going to fill that information here with the days whenever it rolls. So yeah, whenever there's crisis, there's opportunity, and it's just a great example of that. So let's check out how the market looks now. So we've got this big sell-off, right? Well, we're way overextended, and I'm seeing this to be over basically, right? So this is a huge spike, and I'm expecting now a snap back towards the moving average, is 240 or the $50 level. This might even be the end of this, like more than 10-year downtrend on the quarterly chart. We might see kind of a bottoming formation as of here. Very often trends like that, they end with a big spike. I could well imagine that this is it. We're going to see how this month ends. This month is on for another 10 days. We see how this month ends and how the next month continues. We might actually see a rejection on the bottom. Let's see. Whatever, we're trend traders, so we're trading with the trend. And whenever a squeeze like this happens, well, we should actually benefit from that, right? And not being trapped on the wrong foot.